WeWork was supposed to be the future of work. Flexible offices, community, technology, disruption. At its peak, it was valued at $47 billion. But in just a few months, it all collapsed. So what actually happened? Let's make this simple. WeWork's core business idea was straightforward. They leased office space long-term, redesigned it to look trendy, then rented it out short-term to freelancers, startups, and big companies who wanted flexible workspaces. It was basically office subletting with better branding. The idea wasn't new, but the branding was brilliant. They sold a vision of changing the world of work, creating a sense of community, and making work feel cool and meaningful. Investors loved the pitch, and no one loved it more than Masayoshi Son of SoftBank. He saw WeWork as the next big tech company. In multiple funding rounds, SoftBank poured over $10 billion into the company, pushing the valuation sky high. But here's the problem. WeWork wasn't really a tech company. It was a real estate company renting offices. Tech companies scale cheaply, but real estate is expensive, slow, and full of risk. WeWork tried to act like a tech startup anyway, expanding at a ridiculous pace, opening locations around the world, burning cash as if the rules didn't apply. Meanwhile, its founder and CEO Adam Neumann was a force of personality, charismatic, eccentric, and completely convinced of his own vision. He promised investors global domination of co-working, schools, apartments, literally elevating the world's consciousness. He trademarked the word "we" and sold it back to his own company for millions. All this worked while money was easy and investors were willing to believe the hype. But eventually, reality hit. WeWork filed for an IPO in 2019, meaning they had to open their books to the public. That's when things got ugly. Investors saw massive losses, questionable accounting, bizarre governance structures giving Neumann near total control, and a CEO who looked more like a rock star than a reliable steward of billions. Investor confidence collapsed almost overnight. The IPO was canceled. WeWork's valuation plunged from $47 billion to around $8 billion, then even lower. Neumann was forced out, getting a controversial golden parachute worth hundreds of millions, while employees were laid off. SoftBank had to bail out the company to stop it from going bankrupt completely. It was one of the most spectacular flameouts in startup history. So what went wrong? First, the business model was overhyped. WeWork wasn't a tech company. Its costs were real, its margins thin, and it couldn't scale cheaply. Second, it expanded way too fast, opening locations it couldn't fill, spending cash recklessly. Third, investors enabled the behavior, handing over billions without demanding accountability. But above all, it was about storytelling over substance. Adam Neumann sold a vision, and investors wanted to believe it so badly they ignored the fundamentals. WeWork still exists today, much smaller and more focused, but it's a cautionary tale for founders and investors alike. Growth is awesome, but sustainable growth, that's where the real magic happens. Hype might grab attention, but sooner or later, reality comes knocking. At Profit and Sense, we break down business stories like this so you can actually understand what happened without the jargon or spin. If you found this helpful, subscribe for more simple, clear explanations of business, finance, and markets. Thanks for watching, and see you in the next one.